Here in this video, we have some highlights from Elon Musk's second visit to the Joe Rogan podcast, including a video clip of Joe Rogan shooting a bow and arrow at the Cybertruck and seeing what kind of damage is done, which I'll tell you right now, it's not that much. On top of that, Tesla's option activity today was bigger than yesterday, exceeding $1.5 billion. And I think you need to know the positive order value heading into tomorrow's big catalyst. And that is going to be the FOMC. This is where Fed Jerome Powell gets on his podium, gives us a speech, and answers questions. We've seen something very particular happen in the bond market. Towards the last couple of minutes of trading today, bond yields rocketed higher. This is telling you something, potentially. Now, if things happen as I expect they will, you could actually see a big reduction in yields coming over the next couple of days, and that is the single biggest catalyst that will send our markets much higher or much lower, really over the next multiple weeks. So I'm going to give you a rundown of what I expect from the Fed tomorrow, what the markets are expecting from the Fed tomorrow, your best and worst possible outcomes. And to wrap everything up, we're going to get into all of the other economic data that comes out tomorrow and all of the other Tesla stock news you need to know. So let's go ahead and get into it now that you guys are caught up to speed on what we're going to cover here in this video. Hit that like button as well as subscribe to the channel. Number one, it's free 99. Number two, you help push this information out to as many people as possible. And number three, the best prescription for your complication is by far a subscription to the channel. I mean, that's just how it works. I don't make the rules, okay? So hit that like button and subscribe to the channel. As well as that, if you guys want to come trade with us live in real time, come get notified every time I do make a trade. Why I'm making a trade, what kind of strategies we're employing at any given time, link down below in the description of this video. Let's go ahead and get started. Elon Musk says Tesla is aiming to make 200,000 Cybertrucks per year at volume production, maybe more. What we got on Tesla earnings were 125,000 Cybertrucks is the production capacity as of right now. So I don't know where the other 75,000 vehicles for production would come. Maybe that's expanding Giga Texas. Who knows? But this is a little bit better than maybe what we were expecting. And it does seem like once this podcast was actually released, Tesla stock did get some pretty nice green candles, so it wouldn't surprise me if that was the reason why. And here you can see Joe Rogan shooting a bow and arrow at the Cybertruck. I'm not sure actually if a bow and arrow would pierce through like a normal vehicle. I guess we can get that information here in just a second. Interesting choice for a bow and arrow, but you can see there's a little bit of a dent there, but really nothing much. It takes the whole head off of it. I presume this is the Cybertruck Elon was driving, and he was just like, hey, go ahead, shoot the bow and arrow at it. And apparently Elon Musk confirms if you were to bury a Cybertruck, it would still be in the ground up to 1 million years later. Believe it or not, it's pretty hard to figure out if a bow and arrow would go through a car because not a lot of people have tried it. But apparently your average metal car, a bow and arrow indeed does go into the door. It does get lodged in the metal. That was a Ram 1500. So the Cybertruck has something going for it in that sense. Tesla has raised the price of the black paint color on the Model Y to $2,000, a $500 increase. Black is still $1,500 on the new Model 3. This is something that I think is just genius on Tesla's part. $2,000, it's really not going to make or break the decision to buy a Tesla. Now, when I was buying my Tesla, there was black options, right? Gray, blue, red, all of that. And if black costed $2,000, I would have paid the extra $2,000. I already told myself that. If I liked the blue, I would have paid the $2,000-$3,000 to get that instead. The color, if you really want a specific color over another and you've already decided you're going to buy a Tesla, you're going to pay whatever price, as long as, obviously within reason. If it's $10,000 to get red, you're probably not going to do that. But if it's $1,000, $2,000 to do that, you're probably going to do it. Same thing with the white interior to the wood interior. I really wanted the white interior, so I was willing to pay the $1,500 or so difference to get the white interior. Kind of the same thing with the paint. Black is a very popular choice for Teslas, so I do think this could potentially even help out their margins in the coming quarters. Tesla sold 10x as many EVs as other car makers during the first 3 quarters of 2023, and it looks like Tesla sold 493,513 Teslas, and in 2022, at this time, Tesla had sold 390,814, so that is a big improvement as well, just year to date already. Your next highest EV competitor, if you will, is Chevrolet, and they have sold 49,431 EVs, almost exactly 10 times, it literally is 10 times less than the amount Tesla sold. Elon Musk just commented and said, room for improvement, I suppose. Just going out on a limb here, that probably is good news. That sounds pretty good from Elon. Boeing halts plans for a Starlink competitor. Boeing gives up an FCC license to operate at low Earth orbiting satellite constellation, which would have involved 147 satellites. Elon Musk said competing with SpaceX is tough. Tesla option activity for the day today comes in at $1.56 billion with a positive order value of 34%. You had a total of 791 hedge fund and institutional trades. So at 34%, that's not very positive, I will say that, but Tesla did indeed close above $200 per share. That was a big psychological level, so it doesn't look like the option activity had too much of an effect on where Tesla did ultimately close the day. Even though the positive order value was slightly negative, you still did see quite a bit of buyers stepping into Tesla. And if you actually take a look at the volume today, 32% of the total volume was on the call side and 48% of the total volume was on the put side. The open interest for this Friday is about 53% calls and 47% puts, with still a lot of option activity at the 220 call, the 210 call, the 215 call, and the 200 call expiring by this Friday, anywhere from 30,000 to 90,000 for volume here today. This is well outpacing the put volume, which the $200 put had the highest put volume today of about 65,000. Now, depending on what the Fed does tomorrow, that is really going to guide what happens with Tesla stock next. Tesla is very sensitive to the course of interest rates, and that's the biggest reason why. CNBC says, here's everything to expect from the Fed's policy announcement on Wednesday, that there's virtually no chance policymakers will make a move either way on interest rates. But what investors really need to watch for is that commentary that Fed Jerome Powell gives us. And we've already looked at the probabilities for the Fed, to do something tomorrow, and there's virtually none. There's a 1.4% chance the Fed were to actually cut rates tomorrow. That's the first time we have priced in a chance of a cut and no chance of a hike. It's the first time in a long time. And now you are at 98.6% chance of a pause heading into tomorrow, and that's pretty much a guarantee. It would be unprecedented if the Fed actually were to cut rates tomorrow, so I wouldn't expect that, but you want to see how the probabilities move for December. Currently, there's a 1% chance of a pause or a cut in December. My apologies. A 69.5% chance of a hold and a 29.6% chance of a rate hike. So the pause is still what we're expecting for next FOMC meeting in December, but there is a small chance of a cut and a about 30% chance of a rate hike. So whatever Fed Powell says on forward-looking commentary will be important. Now, this says, quote, "There's no likelihood the Fed will do anything here. It wouldn't make sense at this meeting. But what is the message?" said Josh Emanuel, chief investment strategist at Wilshire. "My sense is that Powell is going to want to be very measured and careful about sounding too hawkish. He's managed to thread the needle here very well." And that's because we just don't expect the economy is going to continue chugging along all too well. Your GDP expectations per the Atlanta Fed GDP Now tracker are anywhere from negative almost 1% for Q4 and positive like 1.8%. The average forecast is for about 0.7% GDP growth for Q4. So you're getting closer to actually tipping into a recession here. And that's the last thing the government wants, the last thing the Fed wants during an election cycle. You're going to have a lot of pressure on your hands to cut rates if the economy does start to slow too much. Quote, "The last thing Powell wants to do here is make a mistake and come across as too hawkish, because the implication of that, as you could see, a risk-off environment, you've already started to see a little bit of a technical breakdown in equities," Emmanuel said, "and you have a market that is very, very short treasuries." And specifically what you've seen with long-duration treasuries, 10-year, 20-year, 30-year treasuries, this is an ETF that tracks the 20-year treasury specifically. You basically seen a sell-off of the entire curve heading into the last 20 minutes or so of the trading day today. TLT was actually green for most of the day. Yields actually fell a little bit, and then yields ended up closing the day positive. The 30-year treasury yield up about 6 basis points. The 10-year treasury up 4.5 basis points heading into the Fed tomorrow. So there are a lot of people that are short on treasuries, and that is really what is going to move our markets. If the Fed is too hawkish here, people are going to sell treasuries again. Yields are going to rise even more. And I think the Fed knows 5% on the 10-year is probably a little too restrictive on the economy. The Fed probably does not want to be here. That puts your mortgage rates well over, 8% once you start to break out about 5% on the 10-year treasury. You don't want that kind of restriction on the economy right now. They really want to see how the economic data comes in and how the outlook evolves for 2024. They can afford to be patient here. So this means, in my opinion, treasuries are probably going to rally tomorrow. And wouldn't that be something if you actually seen a bit of a short squeeze in treasuries and you did see yields come down a lot? You've basically only seen yields go up for the last, 6 months or so. It's been basically a straight shot up with bumps along the way. But ever since really July, when you were at 3.78%, you have rallied over 1%. At a time where the Fed hasn't even raised rates since then. So the treasuries have been just doing their own thing. Treasuries technically have raised rates for the Fed 3 or 4 times in just the last couple of months since midsummer. Treasuries have done the work for the Fed. So I think there's some room to give that back. And that could be a very positive thing for Tesla and your small and mid cap stocks, because when treasuries go higher, that hurts a Tesla, that hurts financing companies, that hurts small and mid cap stocks. When treasuries do fall, well, that helps them, right? Or when treasury yields fall, technically the treasuries themselves would be going higher as investors buy them. It's the inverse relationship, kind of like when you buy a dividend stock. If you buy a $100 dividend stock that pays you $5 a year, that pays you 5% a year. If nobody wants to own that dividend stock and they're selling that dividend stock like people have been selling treasuries, and now that dividend stock's $50, well, now you get paid 10%. Now, if people want to buy that dividend stock and maybe it goes to $200, with your 5% $5 dividend yield, well, you would be at a 2.5% dividend yield. So that's kind of the way it works in a nutshell. I do think there's probably a bit of pessimism that's priced in for the Fed, and bond yields are probably already pricing a pretty hawkish Fed. again, considering this last, 20-minute sell-off we've seen in the bond market today, there's probably room for bonds to go higher coming after tomorrow. And again, that could be really good for something like Tesla. Now, early in the day tomorrow, before we actually get the Fed, the Treasury Department will provide more information on its funding needs in the near future. It could be a pivotal moment for investors with a keen focus on how the government manages its 33.7 trillion worth of debt. Bank of America says in a note today to clients, quote, the Fed will likely hold rates steady despite accelerating GDP and employment. The Fed has adopted a more cautious tone due to the Treasury long end rate rise. Arguing rate markets have done some of the tightening at the press conference, Chair Powell will likely reiterate that the Fed is proceeding carefully. The bank added that it expects Powell's post-meeting statements, so largely minor remarks he made in New York earlier in October. In that speech, Powell said he considered inflation to still be too high and cautioned that the Fed, while being able to move carefully, was attuned to possible upside risk to inflation. I'm sure you guys already know this, like I know this, and apparently David Doyle knows this. He is the head of economics at Macquarie Asset Management. He said Powell's comments may be more market moving than the FOMC statement. That's basically it. The markets take Fed Jerome Powell and what he says, and they try to figure out what that means for yields and policy ahead. Now, I will bring up the last summary of economic projections. We will get another one. I believe it's in December, if not in early January. But this was the last one we had. So the median Fed forecast was for a federal funds rate of 5.1% for 2024. So really like 1 to 2 rate cuts max. In June, we were expecting a Fed funds rate of 4.6%. So lately, the expectations really have went higher for longer. If the Fed says anything that is to the contrary to that, like Janet Yellen has been saying recently, she is the Treasury Secretary, well, that could obviously change the market's perceptions. The more rate cuts we expect in 2024, well, the more bullish you can be on Tesla, the more bullish you can be on small and mid-cap stocks. I will point out as well, the range for the Fed funds rate from the Fed officials, and this is basically the lowest end range and the highest end range, was on the low end 4.4% for the Fed's fund rate by the end of 2024, and on the highest end was 6.1%. So somebody thinks Fed funds rates could be 6.1%. Somebody thinks Fed funds rates could be 4.4% by the end of 2024. Which side really wins out after tomorrow? I think that is the big question that will move treasuries, that will move our markets. But you also do have some economic data coming out tomorrow as well. At 8:15 in the morning, you're going to get the ADP employment change for October. You're expecting 150,000 job ads here. Last month was 89,000. So if this number comes in hot, it's usually a guarantee the non-farm payroll report's going to come in hot. The ADP employment change has been coming in way lower than the non-farm payroll report. So that's going to be a big one tomorrow morning, bright and early. The ISM manufacturing PMI comes in at 10 o'clock in the morning. You're expecting 49, as well as the JOLTS job openings. You want to see this come in, as low as possible. You're expecting 9.225 million. Last month, we got 9.61 million, and you had broken under 8 million. So really the lower the better here if you do see the JOLTS job openings come in at like 8 million again. That's probably going to be a big positive heading into the Fed. At 2 p.m., you're going to get that statement. This is Eastern Standard Time. And then you're going to get the press conference at 2:30 p.m. today. Well, technically, still tomorrow. Now, if you guys are not following me over on X, you definitely want to. I like to share a lot of informational charts, some Tesla stock news, things I think you should know as an investor in our markets. It's simply Michael Tyler. Go ahead and give that one a follow. I do want to point this out though, and I do want to look at some of these charts on this right side. These charts are from JP Morgan, and as you can see, this is the sharpest rise in 20 years for credit card balances and credit card balance growth year over year. It's almost straight up with an over 20% rise in credit card balances just within the last 2 years or so. And subsequently, if you look at the subprime auto loan delinquency rate, that is spiking to the highest levels that you have ever seen. So I think if the Fed really is smart here, they're taking these things into consideration and they're saying, hey, not everyone is doing all that great. Now, corporate sentiment turning increasingly negative on the cost of capital. They're basically saying capital is way too expensive. This has been falling since the end of 2021. The sentiment on the cost of capital is now at like 5% of companies agree the cost of capital is where it should be. This is the same level that you were at during the lows back in 08 and 09. Companies are not very excited about taking on new debt right now. And this is credit tightening to recession level as well. You are seeing just the willingness to get credit from banks. Banks are not that willing to actually give you a line of credit or to give you higher amounts of credit. We also did see AMD give us earnings today. The biggest days for earnings are going to be tomorrow and on Thursday, but AMD gave us soft fourth quarter guidance, but expects to sell 2 billion of AI chips next year. AMD did close extended hours up about 2.5%, so that was a little bit of good news. If AMD would have done bad, that would have been pretty negative for Nvidia as well. EPS came in at 70 cents versus 68 cents expected. Revenue beat just a little bit. And again, it really all came down to that forward-looking guidance from AMD. So tomorrow's going to be a pretty big day, especially in after hours. You're going to get PayPal, Roku, Qualcomm, Supermicro, SolarEdge, Airbnb, Etsy, Mercado Libre, and Elf that will all report earnings. Those are going to be some potentially big moving stocks. Thursday pre-market, Palantir, Shopify, Eli Lilly, Moderna, Crocs, Novo Nordisk, Barrick, Penn National Gaming, Cigna, and ConocoPhillips. Thursday after hours, your big dog, Apple. That's really going to conclude earnings season. Any other stock that reports earnings is not really going to move the markets besides an Apple. Apple is the largest weighting of the S&P as well as the NASDAQ. So for that reason, it will be very important. And what they have to say can give you some glimpses into how the economy is doing and how maybe they expect the economy is going to do heading into 2024. You're also going to get Block, DraftKings, Carvana, Fortinet, Starbucks, Coinbase, Pioneer, Cloudflare, and Fidus Investment Corporation. And then Friday pre-market, one that I'm buying a lot of as of right now is Fubo TV. I think they're going to have some really stellar earnings. So couple more earnings to get through. Some of these companies are definitely fan favorites. So the next 36 hours or so are really going to be exciting. As far as Tesla stock on the charts, again, I do expect a continued bounce as Tesla is sitting at 28.55 on the RSI. Anytime you're under 30, I don't care how bearish you are, you need to buy that. For the short term, for the long term, if the RSI is under 30, you're usually getting a pretty good deal. And in even the midterm, Tesla tends to bounce off of that 30 level on the RSI. The MACD is pretty negative. There's not a huge correlation between the MACD and Tesla stock, definitely not to the same degree as the RSI. I will say today was a pretty good day for Tesla, up 1.76% relative to the last couple of red days that we have seen, basically back to back. Some pretty rough ones in there, including yesterday's over. It was like a 5%, over 5% fall, including after hours. Today, you did close above $200 per share. You closed at $200.30 here in after hours, even including the 0.27% down move in after hours, that's great. You're above $200 per share. I think that looks better than not, but I really think the course ahead for Tesla depends on Apple earnings, the data tomorrow, but most importantly, the Fed. If Treasury yields fall a lot because the Fed is not too aggressive and they kind of say, yeah, we would like, what if the Fed said we would need to see a huge spike in inflation to raise rates again? That would basically confirm the Fed is done and done for good. But what if they even go a step further and say, yeah, due to the long end rise of Treasury yields, we think it's too high. We don't think long end Treasury yields should be at 5% on the 10-year. Maybe they should be about 4.5%. The markets would say, whoa, maybe that means the Fed's going to cut and yields would plummet. That would obviously be great for, Tesla here in the short term. It would be great for the markets. So there's a broad range of outcomes for tomorrow and the Fed meeting. I have a feeling it's going to be pretty bullish. I'm not a financial advisor. I'm not a financial planner. That's just my opinion. Let me know what you guys think down below in the comments section. That is going to conclude this video. That is everything you need to know as of right now, heading into the trading day tomorrow. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. If you guys, again, want to come trade with me, every time I make a trade, I do send out alerts. Link down below in the description of this video. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.